Hey everybody, my name is Justin. Thank you so much for joining me today. Today I want to talk about Micron Technologies, ticker symbol MU. This is a recent stock purchase of mine. This is a company I'm very bullish on going out to 2022. So in this video, I'm going to talk about what the company does. I'm going to talk about management team. I'm going to talk about Moat. We're going to get into fundamentals with this company. We're going to talk about risk associated with buying into this company, because there are some there. I'm also going to talk about valuation, what I think this company is going to be worth going out into next year. And I'm going to wrap it all up and kind of give you guys my plan on the stock that I have right now, when I plan to sell. If I'm planning to buy more, what would that be? So hopefully you get some value out of this. If you do, smash the thumbs up button. Really helps out the channel a lot. I personally appreciate it. If this is the first video of watched of mine, my name is Justin. I'm an accountant by day. I try to use my accounting knowledge and background as part of my valuation of companies. So hopefully this is of great value to you. So let's just jump right into this. And first I want to talk about, an overview of the business. What does Micron do? So they are a chip maker, and specifically they are a memory chip maker, and even more specifically they make DRAM chips, and they also make NAND chips. And there are only a couple of companies that do what they do in the entire world. In fact, there's only really three major companies, including Micron and Samsung, that make these memory chips. The memory chips go in personal computers, they go in automobiles, they go into all kinds of different computer devices. This is a company that has over 44,000 patents worldwide. They have over 40,000 employees. This is a company that is on the Fortune 500. In fact, they're ranked number 135 out of 500 companies. They did about $21 billion in revenue for last year. They're supposed to do around $27 billion of revenue this year, and they have locations around 17 different countries. So very, very big company. All right, so now let's talk about the management team, and I want to really focus on two individuals that are at Micron. And the first one is the CEO. His name is Sanjay Malhotra. Hopefully I'm saying that correctly. He has a really impressive background resume. I really like this guy a lot. He was the co-founder of SanDisk. He actually took SanDisk all the way to a Fortune 500 company. So very impressive. He was able to do that. He was the CEO for them from 2011 to 2016. He joined Micron in 2017. The second guy I want to talk about is the CFO. His name is David Sinzer. I usually don't focus on the CFO that much, even though I'm an accountant myself. You think I would. The CEO is typically way more important than the CFO, because the CEO is actually creating a vision for the company on where they want to go. But the CFO, Mr. Sinzer, has been in the media a lot. He's in the camera a lot. And I think he's a really good face man for the company as well. He joined the company in 2018. He has over 20 years worth of operational and financial experience. All right, so now let's talk about Moat for this company. And Moat is basically the competitive advantage of a company. Extremely important when you're buying into a company to make sure they have some kind of competitive advantage, right? If you're buying into a barber shop and if they're the only barbershop in town, that's quite a moat. There's no competition going on, but it's pretty easy for another barbershop to move into town and take some of that revenue away, right? So when you're buying a company, you want to make sure that they have some type of moat. And Micron does. Like I said before, they're only one of three large companies that make memory chips. Not only that, but they are the only US-based DRAM memory chip producer. This space that they're in, it's really, really hard to get into. They have very high barriers of entry. It costs a lot of money, a lot of CapEx, a lot of capital expenditures to get into this industry. If you look at Micron's balance sheet, they have almost $70 billion worth of CapEx on their balance sheet before depreciation. So you're talking tens of billions of dollars that it costs to get this type of business up and running. So not easy to do. All right, so why would I be investing in this company right now? And simply put, it's a very unique space. It almost reminds me of like a commodity type market. So kind of think of maybe, an oil and gas producer, right? So maybe there's only 3 big oil and gas companies in the world. They're the only ones that produce oil and gas. Well, you can think that they have a really good high advantage. They have a lot of control over their particular product, right? So all of a sudden, if supply of oil goes up, they can just jack up prices, right? Where also on the other hand, it can get a little dangerous because also if there's a lot of supply in the market, and all of a sudden, demand isn't as high, it can really suffer on the top and bottom line. And so that's kind of where Micron space is with the memory chips. With only a couple of companies that are producing these, they can have these cycles, almost super cycles. And I'm personally invested in a company called Danaos Corporation, which is in the shipping industry. And they're kind of going through the same thing right now where shipping is just crazy right now. I mean, it costs 4x to 6x to ship a box right now across the world compared to what it was back in 2019. So Micron right now, they're saying there's a lot of tailwinds going out to next year, 2022. Right now where they're seeing a lot of demand, where like PCs, for example, automobiles are wanting these memory chips, and they just don't have the supply, and they can't keep up with the demand. And really, this demand really started back into 2020. Now, it wasn't the whole Rona situation that created this. It was kind of already going that direction anyway. I think the Rona situation kind of catapulted it much quicker, but it was kind of going that way already. And management in particular really thinks that Micron is in a really good space over the next 18 months, so much so that they actually initiated a dividend, and the dividend is only 10 cents. Boring. However, I think that is big. I went back the last 10 years and they've never had a dividend from what I can tell. So I think this might be their first dividend that the company has ever done. So I think that's a pretty big deal. And let me read what the CEO had to say about this dividend. So they said, our industry is benefiting from strong secular demand across end markets and slowing supply growth. Meanwhile, Micron has established ourselves as a technology leader to strengthen our product portfolio and greatly enhance our fab network and our competitive advantage. Moreover, the Micron team is focused on delivering innovative for all with a focus on sustainability. Additionally, within end markets, growing memory and storage content per device has created an opening for the DRAM and NAND industry to capture a greater portion of the end unit bill of materials. As a result, DRAM and NAND revenue growth is outpacing the growth of the semiconductor industry. 20 years ago, the DRAM and NAND TAM used to be around 10% of the semiconductor industry, and this figure is now approximately 30%. Looking ahead, we expect DRAM and NAND TAM growth to continue and reach $183 billion in 2024. So this is the reason why they announced a dividend. They really feel that the company is in a very, very good position right now financially. They have a healthy balance sheet that they can do this going forward. Not only that, but they have instituted share buybacks for the company as well. And this is what the CFO, Mr. Sinzer, had to say recently. He said, I think you'll find in the fourth fiscal quarter that our buybacks are meaningfully higher than our third quarter. So nothing to read there. We do feel like this price is obviously a good price to be buying the stock back. And we are committed to what we've talked about previously, which is to return at least 50% of our free cash flow in the form of buyback. So this is extremely important. I think this is where I messed up initially looking at Micron, because I looked at Micron about 9 or 10 months ago and I just didn't get it. I looked at the space. I didn't understand the business. I didn't understand the free cash flow. I looked at free cash flow. I was like, this is terrible. I'm very strong and a proponent for free cash flow, and it's just not there. In fact, if you look at the last 12 months, I mean, they produced $20 billion of cash from operations, but their free cash flow is almost nothing because they've spent so much in capex, which we'll talk more about going forward here in this video. But what the CFO is talking about is, that they're going to start utilizing a lot of this free cash flow for buybacks. And I find it interesting that, we've seen a big pullback in stock. It was almost $100. Now it's around $70 to $75 that they waited to make these buybacks as well. They only did about $150 million worth of buybacks last quarter, but that should really increase going into the future. And buybacks are extremely important because that can actually increase your earnings per share because you're going to own more piece of the pie, which is very, very critical as a shareholder and creates more shareholder value. All right, so another thing I like to look into when I'm investing in a company, and really is what put the Micron on the radar for me, is super investors. And if I'm seeing a lot of super investors buy into a company, it can give me a lot of conviction around the stock. And my favorite super investors have bought in this company, from Li Lu to Mohnish Pabrai, Guy Spier, David Tepper. At one point, David Tepper, I think this was between 20 and 25% of his portfolio. David Tepper is actually the owner of the Carolina Panthers, multi-billionaire. So a lot of super investors have bought into this company. And now focusing on the stock price right now, it's right around $74 a share it's trading right now. This stock has gone up 60% over the last year. Ironically, though, it's down about 2% since the beginning of the year. And we'll get into some reasons why in the risk section, why it kind of dropped here recently. But some people may look at this and say, oh, it's had a run up of 60%. Have I missed out on it? And I don't think so. And we'll talk more here in a little bit. All right, so fundamentals of this company, I want to focus on that right now. The PE is around a 20. Historically, Micron has been around 15. So from a price to earnings ratio historically, doesn't look great. Now, as far as a technology company goes, it looks pretty good. But Micron specifically doesn't look all that attractive on paper right now if you're focusing on PE directly. Now, forward PE looks to be around a 12. The PEG ratio, which is price to earnings growth, I like to look under a 1. That kind of gives you an idea of what the P is going to be out in the future. And it's a 0.3, which is incredible. It's really hard to find companies right now under a 1 right now in this market, and having under a 0.5 is just incredible. So that looks really attractive for future growth for Micron. Now, as far as the balance sheet goes, their cash position right now is $8 billion. Long-term debt's around $6 billion. Their balance sheet looks really, really good. Keep in mind that if you look at the trailing 12 months, they've produced $10 billion worth of cash from operations, and they basically taken that cash from operations and then just utilize that to buy CapEx, capital expenditures, property, plant, and equipment. And the reason why they're spending so much on CapEx right now is they're looking to future growth. So 2024, they want to get into the EUV market, which is extreme ultraviolet technology. And so in order to do that, they need to buy this equipment in order to get themselves in a place where they can start making that, producing in 2024. But this equipment they're trying to buy for it is in limited supply as well. And so they have to actually make these huge down deposits, down payments for this equipment. So it kind of gives you an idea why they're spending so much on capital expenditures right now. Now, as far as growth goes, so the company did $21 billion of revenue last year. They're supposed to do around $27 billion this year. If we look at last quarter, it was a 40% uptick from the prior year, which is pretty phenomenal. Next year, this company is supposed to be doing around $36 billion of revenue. So why is that? And it's simply because demand for memory chips is increasing significantly. There's not enough supply. And because Micron has such a great moat and there's little competition, they can raise their prices. And people are going to pay it. Companies are going to pay the higher prices to get their memory chips. So to do so, they're going to really create a lot of revenue. And then they're also going to create a lot of profit on the bottom line. So Right now, if you look at the trailing 12 months earnings per share, it's around 3.5. From what I can tell, it's going to be around a 6-ish for this year. So it's going to go from 3.5 the trailing 12 months to about 6 earnings per share this year. And then from my projections on revenue and then also looking at earnings, I think it should be between a 10 and a 15 earnings per share next year. It was just incredible. In fact, their gross margins are going to go from 30% to 50% next year. So a lot of huge growth expected for 2021 and into 2022. All right, so now let's talk about risk associated with Micron and their industry that they're in. And this is really important whenever I look at companies. I want to know not only the good, but what's the bad, what can go wrong here. And it's pretty simple here. They are in a very, very cyclical business, very much like a commodity type business is kind of how I look at them. And historically, I mean, the last several years, Micron and a lot of these memory chip producers, haven't seen a lot of revenue, haven't seen a lot of earnings from these memory chips because it's a supply and demand issue. There hasn't been a huge demand and been plenty of supply, but we're in a weird super cycle with Micron and their industry for memory chips where there's high demand and they can't meet that with the supply. And so on these type of businesses, when things are good, things are great, right? The stock goes up really fast. We've seen it go from around $30, $35 a share back in 2019 to almost $100 a share back at the beginning of this year. So huge uptick, almost like a 3x in a very short amount of time. And so, you have to be really careful with these cyclical businesses because if you get in just right, you can really run, hit that wave up, make a lot of money. If you get in at the wrong time, you can lose a lot of money very, very, very quickly. I mean, they went from $100 a share down to $70 a share in just a few months. So the question is, have we seen the end of this, right? And Morgan Stanley came out with a report here recently, and they titled that "Winners Coming for Micron and the DRAM, producers." And so the whole Morgan Stanley said, the demand is going to drop, specifically for like PCs. What I found interesting though about the article, because I dug into it, I think they missed. I think there's some truth in there if you dig into it. But the funny thing is that if you look at personal computers specifically, the number of memory chips are increasing. So they're actually going to need more memory chips in these personal computers going out into the future. So I don't think it's really the case where winter is coming, like Morgan Stanley says for Micron. I think they're actually in a really, really good space right now to see a lot of tailwinds behind them going into 2022. And I personally believe management over what these analysts are saying. The other thing I've heard, even my recent video when I talked about, stocks I'm looking to buy in September 2021, I had multiple comments saying I would not touch Micron because of, CapEx, the amount of money they're spending on capital expenditures. But if you listen to what management is saying, the free cash flow that they've been spending on capital expenditures, all of a sudden it's going to start being pushed towards, dividend, buybacks for the company. Their goal is 50% of their free cash flow to go to buybacks. And I think what we're going to see, and this is just my personal opinion, I'm not a financial advisor, so don't sue me. This is just my opinion. But I think we're going to see some really nice buybacks in this quarter and going into the next quarter as well too. Especially if they stay under $80 a share. I think Micron is going to be buying a lot of their shares, seeing how valuable it is right now, which is going to increase the earnings per share. But if you're a bear on this stock and you say they're going to continue buying a ton of capex, they're not going to have a lot of cash flow. If you say, that we've already seen that the peak, of these chips, they're going down as far as demand, then this would not be a company you want to buy into. I don't think that's the case. That's why I bought into them. Now let's talk about valuation for this company and kind of what I think, right? And I've had a number of people ask me to do a discounted free cash flow for this company. This company is unique, very similar to Danaus Corporation. So Danaus Corporation, I've talked about previously in this video, is a shipping company, and how I look at that company is their NAV, which is net asset value, which is kind of book value and historical book value. So Micron, I look at, and I'm strictly looking at earnings per share of this company. So they're at around 3.5, for their trailing 12 months. I look at I think they're going to be around a 6 to a 7 earnings per share for this year. I think based on revenue projections and their gross margin increase to 50% into next year, they should be around an earnings per share basis of 10 to 15. So in a normal company, I would say that stock price would be worth $150 to $200 based on a 10 to 15 multiple for earnings per share. Now, because it's kind of a commodity-based business, very cyclical, I don't know that it's going to get to 150. I don't know if it's going to get to 200. I just know at my personal cost basis, which is around $69 a share, I bought it right when it dropped below 70. I think this thing is going to hit triple digits for a stock price. I think it's going to hit $100. I don't know if it's going to hit 150. I don't know if it's going to hit 200, but I do believe it's going to go over 100, especially once investors see that the company is actually buying back shares. I think we're going to see a really nice uptick in price. Where it's going to hit, I don't know. My plan at this point is probably to sell some when it hits 100. It goes up to 120, I'll probably sell some more. We'll see if it gets to 140, I'd sell some more. So I'll just kind of let it run up and kind of sell as it goes up from there. At this point, I'm not looking to buy any more. It's around 2 to 2.5% of my portfolio. If it were to drop down to $60 a share, I might buy more, as long as the story hasn't changed. If the story has changed, that makes, it's a different scenario. But at this point, I think it's fairly low risk for me over the next 12 months. Another thing is I bought these shares with a tax-deferred vessel in my 401k, just because there's a good chance I might be selling out of this stock in the next 12 months, and I don't want to pay short-term gains. So I did not buy the stock with my brokerage account. It was with my tax-deferred account in my 401k. So hopefully that kind of gives you guys an idea of what I think about this company, what I think about the stock. I'm very bullish on this company over the next 12 to 15 months, and I'm really excited to watch this thing go. I wish I would have understood the business a little more 12 months ago, 9 months ago, 10 months ago, but it is what it is. But I'm really excited to see where this thing goes at this point. So those are my personal thoughts. I'd love to hear from you guys. Do you own Micron? Are you interested in Micron? Do you own any other semiconductors out there? Love to hear from you guys. Thank you again so much for watching. I'll catch you guys on the other side. Take care and God bless.